How much does it cost to purchase a house? In this video, I want to walk you through exactly how much you're going to have to bring to the closing table in order to close on a house that you want to buy. Now, some of the fees can seem a little mysterious, but once we break them down, they're really not too complicated. And I'm going to show you pretty much exactly everything that's going to be included when you purchase a house. So the main thing that everyone talks about is the down payment. Now, the down payment, when I talk with clients to get them pre-approved, I hear people saying down payments all over the place. Is it 20%? Is it 10%? Is it 5%? Is it 0%? And really, we're gonna break that down into different loan types and move into that. But the first thing I'm gonna talk about are closing costs. So the main thing that we're gonna look at is what's called the cash to close amount. The cash to close amount is the final amount that you'll bring to the closing table in order to get the keys to your home. Now, included in the cash to close amount are two things. One is your down payment, and the other are closing costs. So closing costs are fees charged by the lender and other third parties to help you secure ownership to a property. So let's walk through a couple of those fees. One of those fees is an underwriting fee. A lender is going to charge a fee to be able to underwrite your loan file and make sure that they have all of the documentation that they need. Another fee that's going to be charged is the appraisal, where we're paying for an appraiser to come out and give a valuation of the property. Another fee that we'll run into is title charges. So title charges are fees charged by a title company, basically to do a title search of the property and manage the ownership of the property. Then we'll also run into homeowners insurance. So you'll be paying the annual premium of homeowners insurance up front, so the first 12 months right at closing. Another thing that we'll have as a fee is escrow. So escrow, when we're putting less than 20% down on a property, escrow is where we'll take the monthly principal and interest payment, and we're going to group that together with the taxes and the insurance of the property as well. That way it's all just one big, easy to manage payment. Now with escrow, escrow requires a little bit of a cushion to make sure that in the event that you fall behind on a payment, that you're always current on taxes and insurance. So normally this looks like a couple months worth of homeowners insurance and a couple months worth of taxes. So when we add all of these fees together, these come into our closing costs. And really, it depends widely on how large of a house you're purchasing and what county you're in, how much homeowners insurance is going to be. The fees vary a lot, but most of the time I see closing costs come in around a few grand. So what we do is we take the down payment plus our closing costs, and we're going to subtract any seller concessions, and that's going to give us our cash to close. All right, now let's talk about down payment. How much do you actually have to put down? Now this varies depending on what type of loan program we're going with. So there are 4 different types of loans that are commonly used. So let's go ahead and break through those really quickly. Number 1 is a VA loan. So VA loans are available to veterans. So if you're not a veteran, that kind of immediately disqualifies you from that loan, but VA loans give you the option of 0% down. Then we can move on to USDA loans. Now USDA loans are loans that have 2 main requirements. They have to be in a USDA eligible area, and there's an income limit to the USDA loans as well. Now USDA loans allow 0% down, but you have to meet those 2 requirements. So most of the time, I don't see a lot of USDA loans used unless you're in a rural area. So that brings us to the 2 most widely used loans, the conventional loan and the FHA loan. Let's start with the FHA loan. The FHA loan has a minimum requirement of 3.5% down. Now this 3.5% down could be funds that you use from a retirement account, from your personal checking or savings, or as a gift from a family member. So the FHA loan is perfect for most people. It's 3.5% down, it's insured by the government, it's going to give you some great loan options. Now that brings us to the conventional loan. The conventional loan is one of the best loans that you can get. It's going to give you the best rates possible, but in return, you're going to have a pretty good credit history and usually some solid compensating factors to get the loan. So the conventional loan is going to require 3% down as a minimum. In some circumstances, let's say you're bringing on a co-borrower who's not going to be living in the property, your minimum is going to be raised to 5%. So overall, The down payment for most of these loans, whether we're going VA, USDA, FHA, or conventional, are going to be pretty low. Especially compared to, I hear a lot of people talking about the standard of 20% down, which isn't true. You don't have to put 20% down on a property. But the more that you do put down on a property, the more likely odds that you're going to get a better rate. And obviously you're going to get some lower payments because you're going to have a lower loan amount. But bringing all this together, when we're talking about the final cash to close on a house, what we're first adding is how much of a down payment are we looking at? If you're going an FHA loan, it's going to be 3.5%. If it's a conventional loan, it's going to be 3%. So take whatever your estimated purchase price is going to be. Let's say it's $100,000. And let's say we're going with a conventional loan. So we're going to be putting down 3% as a minimum. On top of that, we're going to be adding a couple grand worth of closing costs. Then, if you have a great realtor, if you need some recommendations, I can give you those as well. You're going to have your realtor see if they can negotiate in some seller concessions for you, which is going to save you a couple grand at closing. So hopefully this is some good news. Hopefully this is a little bit less costly of a purchase than you're imagining. Or maybe you're on the opposite side and saying, hey, I have a lot of money to put down. And if you do, that's fantastic. But if you don't, that's perfectly okay. There are loans I've done for people where they've had to bring no money to the closing table whatsoever. There are people who have brought $10,000 and there are people who have brought $100,000. It's all across the board on what you can bring. But if you have more questions and want to dig into a little bit of how much will you have to bring down depending on your unique circumstance and situation, I'd love to talk with you. What you can do is set up a call with me. In the description, I put a link to a website called Calendly. And what it does is it gives you access to my calendar. You get to kind of peek into my life a little bit, and you can choose a date that works for you, enter some information, and then what we'll do is we'll set up a call. It'll be about 15 minutes, and we'll just work through where you're at, where you're looking to go, and some a kind of a good game plan to get you there. So whether you're looking to buy this week or looking to buy a year from now, what I want to be able to do is help you walk through some of the questions that you have and make sure that you're set up for success. So that way you know if, hey, maybe I need to work on my credit, we can set that up for you. Or maybe I need to work on some savings, or I just have some questions about the loan process. Go ahead, schedule a call with me. It'll take about 15 minutes and we'll walk through and craft a game plan for you that works best so we can get you in a house that you love. Well, hey, thanks for watching this video. I hope you enjoy the rest of your week and I'll talk with you soon.